Hi, in this video, I'm explaining depreciation accounting part 2. This video is useful for CBSE class 11, CA Foundation, CMA, ACCA, BCom and all the state boards intermediate. The first method of depreciation providing is the straight line method. This is simply called SLM. In this method, we have to face four different situations. In the first situation, that is case 1, in this situation, we have to prepare asset account, depreciation account, and we don't prepare asset disposal account and provision for depreciation account. Now, coming to the problem number 2. The problem number 1 was already explained in part 1 of depreciation accounting. Now, the transaction started here on 1st January 2018. But before reading all this, first we have to identify the date of closing of the accounts. That is very important. Here, at the end of the question, the problem says that he closes the books on 31st December. It means the accounting year starts from January 1st to 31st December, ends on 31st December each year. So we write the first year as 2018, second year as 2019, third year as 2020, fourth year as 2014. Why 4 years? Because he asked for 4 years in the question, 2018 to 2021. Once you write these years, the next step, start reading. The step 1, identifying the number of years. The second step is start reading. On 1st January 2018, machinery was purchased by X for 50,000. You put the date of purchase here, 1/1/2018, 50,000 purchase. There is no sale. Then continue reading. On 1st July 2019, additions were made. Means one more machine was purchased to the extent of 10,000. So you have to put the date on 1st July 2019. In 2019, 1/7/2019 and 10,000 amount you have to write here. And then on 1st April 2020, further additions were made to the extent of 6,400. So you write 2020, 1/4/2020, 6,400. And then on 30th June 2021, put the date 30th June 2021. There is no purchase. Instead of purchase, there was a sale. Machinery, the original value of which was 88,000 on 1st January 2018 was sold for 6,000. It means a part of the machinery which was purchased on 1st January 2018, the cost of which is 8,000 was sold for 6,000. This 8,000 includes in this. That 8,000 is sold after using for 3 years, 3.5 years. it is sold for 6,000. First, you have to write like this. Then your preparing machinery account will be very easy. Then open the machinery account in the books of X. You know the format, date particulars amount and date particulars amount. And then you first record this transaction. This is the purchase. When you purchase machinery, machinery comes in, cash goes out. Whatever comes in is debited, whatever goes out is credited. That is the journal entry. See here, according to modern approach accounting procedure, modern approach rules, in case of assets, increase of assets are debited, decrease of assets are credited. That is the rule. When you purchase an asset, your assets are increasing. That's why in machinery account, you have to write on debit side. We have previously there was no machinery in this case. Now we are purchasing one machine means assets are increasing in the name of machinery. So that's why we have to record on debit side. Put the date 1/1/2018. To bank we should write, to bank account 50,000. And there are no other transactions in the first year. That's why at the end of the year, you have to calculate the depreciation and put it on credit side. That is the rule. Why depreciation is credited? You must know it. As a beginner, you must know it. See, when you are using this asset, the asset's value is gradually decreasing. So there is a decrease. The decrease is in the form of depreciation. Since it is a decrease, you must record on the credit side. Debit side increase, credit side decrease. So you must write by depreciation account. The date, end of the year. End of the year is 31/12/18. How much is the depreciation? 10%. 10% on original cost. What is the original cost here? 50,000. So 50,000 into 10/100 is 5,000. Now you have to take the balance. How? First you take the debit side total, put the same amount on credit side. This total comes here 50,000. This 50,000 minus 5,000, 45,000. This is the balance. By balance carried down. You have to write the same date, end of the year. That is 31/12/18. The same carry down will be brought down here. That is 45,000. Here you have to write to balance brought down. Here you have to put the starting date of the second year. The starting date of the second year is 1/1/19. Now you have to look at this breakup of transactions. In 2019, that is second year, we purchased another machine on 1/1/2019. Put the date here, 1/7/19. To bank, because we are purchasing. Bank account, how much is that? 10,000. Now there are no other transactions in the second year. Then you have to go to the end of the year, again calculate the depreciation. Put it on the credit side. Date is end of the year 31/12/19. By depreciation you should write. By depreciation account. Same thing you have to write here also. But how many machines are there at the end of the year you have to see, and which machine is used for how many months also you have to see. The first machine is 50,000 and it is used for the whole year because it was purchased last year. So it must have been continued in the second year till the end of the year. That's why for the whole year you have to calculate the depreciation. 10 by 100 equals to 5,000. Now if you take the second machine, 10,000, again 10%, but this machine is used only 6 months. Why? Because we purchased it on 1/7/19 and we used it till 31/12/2019. Only 6 months we have used. That's why we have to calculate the depreciation for 6 months. So 6 by 12 equals to 500. Then total 5,500. 5,500. Now you have to take the balance. Take the debit side total 55,000. Put the same amount on credit side 55,000. 55,000 minus this 5,500. 49,500. This is to be written as by balance. C by D. Carry down. Date, end of the year. You can simply put ditto. Now, this amount comes down as the opening balance for the next year. That is third year. 49,500. Here you have to write to balance brought down. Put the date, the very next date of the previous year ending date. That is 31/12/19. The next year starts from 1/1/2020. Again, you have to come to this information. In 2020, we have purchased on 1/4/2020 for 6,400. So you write 1/4/2020. 1/4/2020. You should write the same way to bank account. How much is the amount? 6,400 over. Now, at the end of third year, again we have to calculate the depreciation. Every year, same process. At the end of the year, you have to calculate the depreciation. Oh, what is the date? The date is 31/12/2020 by depreciation. Depreciation on how many machines? You have to verify. We have 3 machines. First machine 50,000. We have used it for whole year. 10%. 10 by 100 equals to 5,000. Second machine also used for whole year because we purchased it in the second year. Now we are calculating the depreciation for third year. That's why we have to calculate it for whole year. That is for 10,000 into 10 by 100 equals to 1,000. Now coming to the third machine, we purchased it on 1/4/2020. From 1/4/2020 to end of the year, 9 months. For 9 months only we have to calculate. See, 6,400 into 10 by 100 into 9 by 12. The depreciation would be 480. 480. Now take the total. The total is 6,480. 6,480. Now you have to take the balance again. Every year the same process. Debit side total 55,900. Here also 55,900. Now if you take the balance will be 49,000. 49,420. Here you have to write by balance carried down. Put the date, ending date, that is 31/12/2020. Now take this amount as a brought down balance 49,420 to balance brought down. Put the date, the beginning date of the fourth year, that is 1/1/2021, and in the fourth year we haven't purchased any machine. Instead, we sold a machine which was purchased on 1/1/2018. The cost of the machine which is sold is 8,000. Now you have to remove 8,000 from this account. You have to eliminate. How? Already you have recorded the depreciation 3 years. Those depreciations are included in this. Right. But the remaining should also be eliminated. How? By 3 items you have to eliminate the cost of the machine. How? The process is, first, how much we have received? 6,000. On which date? The date is on 30th/6/2021. 30/6/21. By bank account. We have received cash through bank. That's why we are writing by bank account. How much? 6,000. After that, we have to calculate the depreciation in that year, in the year of sale, from this date to this date. This is the opening date of the fourth year. This is the sale date, the date of sale of the machinery. So, for the date of sale, up to the date of sale of machinery, we have to calculate the depreciation by writing depreciation account. How should we calculate? You take original cost because we are following SLM method. So 8,000 into 10% means 10 by 100 into, for how many months you have used this machine in the fourth year. How many months? On 30th June 2021 you have sold, means from this date to that date, 6 months. So 6 by 12. The amount will be 400. This is the depreciation. So till now we have eliminated 3 years depreciation and a fourth year half year depreciation, and amount received also we have eliminated. And still, what is the remaining balance of that machine? That machine means 8,000. For that, you should calculate profit or loss. That profit or loss is to be recorded in the machinery account. When you record profit or loss in the machinery account, this entire cost is eliminated from the machinery account. Now, how that the mechanism I'll explain later. First of all, for the examination purpose, you should remember 3 points at the time of sale. One is for how much you have sold it. The second point, this is first point. Second point, what is the depreciation in the year of sale? Third point, what is the profit or loss? Once again, amount received, the depreciation in the year of sale. Third is profit or loss. Now we have to find out the profit or loss. You should write working note for finding the profit or loss. You should write here sale of asset. Simply machine. Machine. First, you should take the original cost. Original cost of the machine sold. Of the machine sold equals to 8,000. Date on 1/1/2018 you purchased. That on that date the original cost is 88,000. Now from this you have to subtract depreciation from purchase date to sale date. From date of purchase to sale date. How many years and how many months? Totally 3.5 years. First year we have used, second year we have used, third year we have used, and fourth year up to 30th June we have used. So 3.5 years. Depreciation for 3.5 years is equal to 8,000 into 10% into 3 by 3 1 by 2. 3.5 years. What is the amount? Amount will be 2,800. 2,800. From this you have to subtract this. Then 5,200 comes. 5,200. Look, this is 8,000 original cost. Now, the depreciation is up to the date of sale 2,800. So, the remaining balance which is continuing in the machine is 5,200. Out of this we have received 6,000. It means more than this amount we have received. So here what you have to do is that here you have to write book value oblique written down value. You can use either of the words. This is called book value or written down value. Now under this you have to write sale price, sale proceeds, sale price or sale proceeds. Proceeds means the amount received equals to 6,000. Now by comparing these two figures, according to our calculation, the asset balance is, the machine balance is 5,200, but we are able to sell it for more than 5,200. It means we are gaining profit. So this excess amount is 800. 800. This is the profit. Why we made the profit on this asset? Because the asset value increased. Since it is increased by 800, we have to write it on the debit side. Already I have told you in the beginning itself, when asset value increases, debit side you should write. When asset value decreases, credit side you should write. Now, because of depreciation, asset value is decreasing because we are able to sell it for more than what is the book value. Asset value is increasing. That increase is to be debited and it should be transferred to profit and loss account. That's why we should write here to P&L account. That is 800. Students get confused. Where to write profit or loss? This side or this side? Blindly they remember, if loss comes this side, profit comes this side. Why? Why means, if loss means this side. Why? Because asset value reduced by that amount. When profit is recorded on the debit side means asset value increased. That's why we have to record on the debit side. So what is the date? That is the date of sale. That is 30th June 21. Now after writing this, we have to go to the end of the year and we calculate the depreciation. What is the end of the year? 31/12/2021. by depreciation. Now you have to see how many machines are there with us. On those machines we have to calculate the depreciation. Number one, out of 50,000, the first one, out of 50,000 we have sold 8,000, and on that we have already calculated depreciation on that 8,000. The remaining is 42,000. 42,000 into 10% equals to 4,200. 4,200. The second machine is not disturbed. So 10,000 into 10 by 100 full year equals to 1,000. 1,000. Now third machine. What is the third machine cost? 6,400. Third machine cost 6,400 into 10 by 100 equals to 640. 640. Now you should take the total of these three items and put here. What is the total of these three? 5,840. Now after this we have to take the balance again. This total is 50,220. 50,220. Here also 50,220. Now from this you have to subtract all these items. The balance would be 37,980. This is known as by balance carried down. By balance carried down. The date is end of the year, that is 31/12/2021. This amount is to be taken as the brought down 37,980 to balance brought down. The date is the very next day, that is 1/1/22. This is the way you have to prepare the machinery account. Now let's prepare depreciation account. How to prepare the depreciation account? And this is very simple. Here whatever depreciation you have recorded on the credit side, you have to record on the debit side. First year 2018, the date is ending date. Ending date means 31/12/2018 to machinery. How much? 5,000. The same amount is transferred to profit and loss account, putting the same date here. That is 31/12/18 by profit and loss account. Why it goes to profit and loss account? Because it is a loss. Loss means we are using the asset. When you are using the asset, you are losing the asset value. That's why it is loss. So it should be transferred to profit and loss account. And after that, you have to dot two lines here over. Now the second year 31/12/2019 to again machinery. Second year, what is the depreciation? This one 5,500. 5,500. Same amount. Again date 19/12/31 by P&L account. How much is that? 5,500. Draw lines like this. Then third year 6,480. 6,480 to machinery account 31/12/2020. Again 31/12/2020 by P&L account. Same amount 6,480. Now fourth year there are two different dates. One is 30th June 400. The other one is 31st December 5,840. Those two we have to record separately with separate dates. 30th June 2021 to machinery. How much? 400. And 31st December 2021 to machinery 5,840. 5,840 over. Now this total you take 6,240. 6,240. So you should transfer it to profit and loss account. On which date? At the end of the year, 31/12/2021 by P&L account. This total 6,240. Total is 6,240. So this is the way you have to prepare machinery account and depreciation account. This is the first case. In the first case, we have to prepare only asset account, depreciation account. No disposal account, no provision for disposal account. The other three cases are there. I am going to teach about those three cases in the coming videos. Thank you very much. If you like, please share it to your friends and subscribe and encourage me. Thank you.